Hi and Assalamualaikum. My name is Siti Binti Azli and I am from the class BA1144A of Investment Analysis. I chose the topic of fundamental analysis to be present to you guys for today. As a potential investors, we can use both fundamental analysis and also technical analysis to make a wise investment decision. So what is actually fundamental analysis? Fundamental analysis is an approach of analyzing and evaluating a stock in order to measure its intrinsic value, or what we call as fair value. This can be done by examining the economy and industry conditions as well as the company specific variables that we're going to talk about later. So the first thing that we're going to talk about in this fundamental analysis is security analysis. Securities are assets which have some financial values. There are three characteristics of securities, which is the first one, securities are fungible or interchangeable. Securities are also tradable, and lastly, securities represent the financial value. Securities consist of debt securities, equity securities, and also derivatives. Let's move on to principle of security analysis. Security analysis is an approach that provides a measure of intrinsic value, whether the stock is worth to buy or whether the stock is compatible with the amount of risk involved. Besides that, it also helps to judge whether the stock is overvalued, undervalued, or fairly priced. Thus, the investment must offer a level of expected return proportionate to the amount of risk involved. An investor will buy a stock only if its market price does not exceed its worth intrinsic value. However, intrinsic value depends on several factors, which are estimates of the stock's future cash flows, the discount rate used to translate those future cash flows into a present value, and lastly, the risk associated with the future performance, which helps define the appropriate discount rate. Top-down approach to security analysis. As we can see from this top-down approach, it begins with economic analysis and then moves on to industry analysis and then to the company analysis of a specific company. Economic analysis. Stock prices are heavily influenced by the state of the economy and also by economic events. The overall performance of the economy has a significant effect on the performance and profitability of most companies. Economic analysis is the first step in the top-down approach. It illustrates the entire process of the security analysis. There are two broad types of economic factors such as price competition from foreign competitors, political developments, trade policy and exchange rate, while for domestic economy, it consists of factors such as the gross domestic product, which is GDP, industrial production, unemployment rate, inflation, interest rate, and budget deficit. Business cycle process. The first one is expansion. It is the first trip up the hill. Next one is peak. It is the highest point of the GDP. The next one is contraction, which is the curve begins to head downward. And the last one is true, which is the value where the curve evens out again. There are few economic variables and the stock market. The first one is real growth in GDP, industrial production, inflation, corporate profits, unemployment, interest rate, and also money supply. Industry analysis is the second step in the top-down approach, which focuses on industry life cycles and industry structure. There are four stages, which is the first one is initial development or introduction. The second one is growth or rapid expansion. The third one is maturity. And the last stages is called decline. Now let's talk about the last step in the top-down approach, which is company analysis. Financial statements are important parts of company analysis. An investor always uses three financial statements in company analysis, which is balance sheet, income statement, and statement of cash flow. The income statement and balance sheets are essential to carrying out basic financial analysis because it contains data which is used to compute the financial ratios.